What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get some free stock, make sure you check out my link below. Hey, I'm Chris, and today's video is a recap about the day we had, but what we're going to do in preparation for tomorrow. Hey guys, listen, if I helped y'all in any way, whether I was help you make some money or give you a new perspective on the stock market, please make sure you like and subscribe and join us on a journey. Without further ado, let's take a look at my portfolio. Okay guys, we gotta talk about the sell-off that we had today. Take a look at my portfolio. As you can see, even your boy was brought down with today's action. That is neither here nor there. This is also why we don't get caught up into day-to-day fluctuations, because if this is oversold tomorrow, this should bounce right back. If not, we may experience a little more weakness and downward pressure tomorrow, and so this may go a little bit lower, but again, it should make a full recovery and things will restore itself back to its rightful place, guys. But listen, this is the joys of the stock market, but for us, it's time to go shopping, guys. Down below, I want to see hashtag let's go shopping. Listen guys, we are about to go play ball, okay? Whenever we get opportunities like this, we got to take full advantage. Some of our plays are at an opportunity that we can either get a position reestablished, build up our share count, and or get into them all together, guys. But regardless of where you're at on the journey, guys, let's get ready to dominate. Today, I want to talk to you about 3 stocks that I want you to at least consider on your journey. I can't tell you what to do. I'm not your financial advisor. I'm going to just give you some suggestions, tell you what I'm doing, what I'm looking at doing, and then you guys go from there. But regardless, let's crush the game. Kicking things off with AMC, ticker symbol AMC, sitting at $47.38, down 8% today. I can't help but to take advantage of this being down 8%. Guys, it won't stay there long. It might have a little more downward pressure tomorrow. Okay, maybe down to 46.50-ish. If it goes lower, it should find support at that range. No lower than 46 even. Okay, if it goes for lower than that, then you're looking at 44, 42. I'm not expecting that, but anything can happen in this market. However, if you want to get this on some downward pressure tomorrow in anticipation of at some point it returning back to the $50 and $51 range before retesting 52, please consider AMC, guys. For me personally, I keep 125 shares, but this is more of a swing trade for me, so I'm not ever doing too much in terms of my movement. I'm in and out most cases, and so again, play it how you choose to. But again, look for those ranges. 46.50 on tomorrow if it dips that low. If it was to be a falling knife and go lower, look for 44 or 42. Guys, Cleveland Cliffs is another one that I want to put on your radar. Okay, it is down to the low 22 range. Okay, it touched briefly the 21.95 level. Of course, your boy scooped up a couple more shares because again, I'm trying to get this at around the $22 level, knowing that this play will go to $24, $25, $26 in the short term. Okay, look, this is just a quick trade in and out. I'm buying it at 20. I had it at 18. Okay, I'm selling it at 26. I'm gonna rebuy it at 22, 20. If it go to 18 at 18, sell it at 26. It's just a back and forth play, but it has some great movement, and so I want to take advantage of it, okay? And one more, guys, is Apple, ticker symbol AAPL. It is currently sitting at 148. I like this under 150, but I love it even more at 144. So I got my eye on it, and if it goes to that level, I'll add more to my position. In this particular case, guys, this is called averaging up. That's going to be our word of the day, and I'll talk to you about that momentarily. But again, I already have this play in around the 80s, okay? But I want to build my position even higher. This is one of my pillars. I talked to you guys about Nike. I talked to you guys about Apple, how this is where the bulk of your money goes because it helps preserve your portfolio, okay? It helps hold you up when the volatility hits because look at this. This doesn't go down 8%. Okay, ever, okay, unless a crash happens, okay? But listen, that's why you want to have your pillars hold the majority of your money, and then you use your growth stocks and other things like that for growth potential. All right, but look at this, guys. They got the iPhone, they got all these new releases coming out. take advantage of it. But if you see weakness, I'm talking about under 150, 147, 144. We love it even more if it come lower than that, guys. Please pounce. This is the kind of play that should finish the year around 180, 185 if all goes well. Listen, guys, up next is our word of the day, and our word of the day is average up. Listen, too often times, man, nobody tells you guys about the game and what you should be doing in the stock market. One move you have to make at some point, if you have a stock that you want more shares in, you have to average up. Yes, it needs to be known that averaging up will disrupt your current average cost. So if you like me, and for instance, you got Neo, I had Neo at $5, $7, and now my average cost is $17. Okay, I'm up 100% in Neo or more as we speak. I'm always up 100% in most of my plays. It's just dominating the stock market. But check this out. At some point, you want to add more share to your position. You might have been like me, buy thousands of shares, you take profit, now you left with 125, but you want to build it back up to over 125. And so at some point, you have to average up. If Apple, for instance, comes to 144, I'm going to take my $80 average cost and move that up to 95 because I'm going to buy more shares to have more shares of Apple because it's at a price you just can't turn down, knowing that it's going to 185, okay? And so listen, guys, part of the game, you have to mess up your average cost sometimes by averaging up, knowing that over the long haul, you're going to still win in terms of your average cost because the stock typically goes up higher and higher over time. I'm talking about 1 to 3 years, okay? So again, have a 50,000 foot view, have a macro vision in terms of what you're looking at, in terms of the lens you're looking at the stock through, so that you know you're not being too narrowly focused, okay? Listen, guys, up next we have our question of the day, and our question of the day comes from Carol Lee. She says, Chris, I got charge point at 21.15 and I have 13 shares. Can you show us how it looks at a low end buy-in and I'm not able to get 125 shares? Carol Lee, this is a great question. Listen, guys, on the journey, and I love this, know that I'm for the little person. I'm for the new, beginning, and small investor. Yes, I have big money, large money. I sometimes see the YouTubers saying they put 600,000 in, and I can't lie, I'm sometimes tempted to do that too, but I don't want to mess up the 100K challenge putting that much money in. That would defeat the purpose. That's over 100K, but that's easy to do. What I like to do is this, okay? On the journey, you want to get 5 shares initially. Then you want to try to get to 10 shares. Then on your journey, after that is established, you try to get to 25 total shares. So in the case of charge point, you would want 25 shares. Once you get 25, when it pulls back under 21.15 like today, when you have the means to do so, you would add 5 to 10 more shares. So that will put you around 30 to 35 shares en route to next trying to build it to 75. Again, the stock goes up and it comes down. It goes up and it comes down. Never in a straight line will it ever go from 20 to 40. Yes, it's going to hit 40. Yes, we'll be celebrating and hitting another home run. That's what we do around here. However, it will give you many, many opportunities to still build your play up over time before it even gets to 40 with all the day-to-day fluctuation. You just got to have your limit order set and or be watching it and knowing where you want to get in at so that you can build your position out. After you get 75, the next goal is for you to get around 90 to 100. Then after you get 100, try to get 125. We try to get 125 so I can at least do cover calls with you guys, because that's something we can do when we own 100 shares of our stocks, okay? And that's just making money weekly, monthly, daily if you want to by doing cover calls. That's neither here nor there. I'll teach you guys that in a little bit. But great question, Carol. That's how you build it up. Over time, slow and steady. 5 shares here, 10 shares there, 15 shares here, ultimately trying to get to 10, 25, 50, then 75 en route to 100, then to 125. Sometimes you get there, sometimes you don't, okay? But it's about the practice and getting in the habit of trying to get there. Listen, guys, if you have questions or comments, leave them below. I'll grab them and add them to my next video. Listen, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll see you all in the next one.